Hi, my name is Alex Carlucci with Gustan Associates. Let's talk about really the worst of the worst derogatory credit. So there's tax liens, there's delinquent tax bills, there's judgments, there's collections, and there's charge-offs. Let's start with the collections because they're the least worrisome. Let's start with medical collections. They don't count against you. The FHA looks, well, this is all FHA. FHA looks at medical collections as just a non-issue. They do hurt your credit score when you get them. So if you have a 750 credit score and also a medical collection pops up, you might have a 680. So you don't want to have them, but they're not going to stop you from getting a loan. They don't count any of the debt against you. They don't care. It's not, you could have $100,000 in medical collections. It doesn't matter. Now your score might be low, but it doesn't matter. So if you can remove them, completely remove them, not just pay them. Don't pay medical collections. If you can get them removed, your score might go up. Charge-offs is considered a collection, and we don't count those against you either. Most other investors do. So we here at Gustan Associates do not count charge-offs against you. Remember that. That's one of our biggest selling points. Then you have regular collections. You have a repo from 3 years ago. You got a $10,000 balance. What we're going to do on that is we're going to hit you for 5% of that balance. So 5% of 10,000 is $500. So now all of a sudden you have a $500 car payment. But you don't have to pay that $500. We have to hypothetically pretend it exists and count it against your debt to income ratio. So that's how we handle collections here at Gustan Associates. Next is judgments. Judgments is a deal breaker. If you have judgments and you're trying to get a loan, you can't unless you show that you've pulled it out of judgment status, went on a payment plan with that company, and have made 3 timely payments. If you've done that, we can use those payments against you and not have the judgment be an automatic stop, because the judgment itself is just an automatic stop. So it has to be renegotiated, and you had to make 3 payments on time. Then let's go to tax liens. Just the same as judgments. Not tax liens, sorry, delinquent taxes. So let's say you filed your tax returns for, this is 2018 or 2019 we're in, and your 18 tax return were done in April, and you had a balance of $600. If you didn't pay it, that's considered delinquent. If you're on a payment plan and you've made 3 timely payments on that $600, then they won't count against it. But let's say it's $10,000, just 3. Let's say you negotiate for $100 a month for 10 years. So 3 timely payments of $100, and we'll just count that debt against you, and the tax delinquency won't stop you. Now, so you can't accelerate those payments. So you have to make 3 monthly payments. You can't just, if it's $100 each month, you just can't pay $300 one month and say I made 3 $100 payments. You actually have the time has to expire. So May, June, July, you make those 3 payments. August, you're ready to get a mortgage. Let's talk about tax liens. Now it's a little bit more complicated. If you owe the IRS 50 grand from 3 years ago, and you have a lien against you that's just waiting to attack anything, like any property that you're going to buy, that means you let it go so bad that they put it in a lien status. It's not just delinquent, it's now in a lien status. You can get a mortgage, but you have to go on a payment plan with them for 3 months, but you also have to get the IRS to subordinate it. So you have to send in a piece of paper and to the IRS and ask for subordination. That's the only way around those. Those are tricky ones. We do them here. We have the form. I can send you the form. Just let us know. And those are the major derogatories that people are concerned about and how they do get in the way of you buying a house. So the collections hit you for 5%. Medical don't count. Charge-offs don't count. Judgments, 3-month payment plan. Tax delinquencies, 3-month payment plan. Tax liens, 3-month payment plan, and ask for a subordination from the IRS. And there's one more that gets us once in a while, and it's child support payments. So if you're in the rears, they want to see you paying for 12 months on the time. So if you owe $30,000 for your child support payments that you haven't paid in 10 years, they want to see you on an agreement with the court, and they want to see a 12-month payment history of that. So that one's a little more tricky. So those are the major derogatories that affect people in getting a loan. And hope you like this video. Please share it, and leave any questions below. We'll get back to you. Thank you.